Monday, December 2nd. This coming Monday, at 2:30 Australia will report retail sales. They reflect the change in turnover at retail locations in the quarter under review, compared to the same period last year. The calculation includes data on sales of major groups of goods. A decline in the indicator may have a negative impact on the Australian dollar. And at 3:45 China will publish a Manufacturing Purchasing Managers Index from Caixin. It is calculated from a survey of purchasing officers at more than 500 large manufacturing companies in the country. The sample of companies is drawn according to the company's contribution to China's GDP and a standard industry classifier. A rise in the industrial PMI leads to an appreciation of the yuan. Tuesday, December 3rd. Traders will be watching for news from Brazil on Tuesday. The GDP report is scheduled for 14 o'clock there. It reflects the total value of all goods and services produced in the country over a certain period of time. The purpose of GDP is to measure economic activity and the level of prosperity. The higher the production, the greater the growth in consumption, investment, and trade in general. This has a positive effect on the Brazilian real. And at 17 o'clock will be known about the number of job openings in the U.S. labor market. Economists use this report to analyze the country's labor market and to characterize business cycles. The growth of vacancies, on the one hand, favorably characterizes the state of the economy. But if unemployment continues to grow, it indicates the imbalance of the labor market and the lack of qualified personnel. In general, this favors the dollar. Wednesday, December 4th. On this date, market players will focus on news from Australia. At 2:30 there will be released a report on GDP. The impact of this indicator on the Australian dollar is related to inflation. In turn, the relationship between GDP and inflation is quite thin. In general, the growth of gross product is associated with an increase in spending within the country. And at the same time inflation rises. Up to a certain point, this spurs the economy and the currency to appreciate. At 17:30, the U.S. will be informed about the crude oil stocks change from the EIA. The report reflects the number of barrels of commercial unprocessed crude oil contained in the storage facilities of U.S. companies. The increase in the number of crude oil stocks in storage in the States indicates either a decrease in demand for raw materials or an increase in production. This has a negative impact on global oil prices. Thursday, December 5th. On December 5th at 8:45, Switzerland will report the unemployment rate. The statistics include people who do not have a regular income, both full-time and part-time. The figure does not include self-employed residents of the country who have a regular income and pay taxes to the Treasury. An increase in unemployment could have a negative impact on the Swiss franc. At noon, Eurostat will release a report on retail sales. Retail sales include the entire sum of invoices issued by the statistical units, recorded during the reporting period. All payments, including packaging and transportation costs, are also taken into account. An increase in retail sales in the euro area may have a favorable impact on the euro. Friday, December 6th. On this day at 6:30 the Reserve Bank of India will announce the interest rate decision. The regulator provides short-term loans to commercial banks in the country. If the bank's rate is higher than expected, it can be considered favorable for the Indian rupee. A lower than expected rate may negatively affect the currency. And at 3:30 Canada will report the employment change. The part-time employment rate includes people who are employed for less than 30 hours per week. The data for calculating the full employment rate comes from the results of a regular nationwide population survey. The interpretation of the indicator depends on the context. The growth of full employment is usually interpreted as a favorable factor of economic development.